Welcome back to the channel, guys. Today, we're diving into a topic that's causing quite a stir in the Internet Computer ICP ecosystem. Large holders, also known as whales, are offloading their ICP tokens. But what's really going on here? This comes at a time when the network is showing signs of growth and on-chain AI is beginning to gain traction. So why are some of the biggest players in the space cashing out? In this detailed video, we'll explore the recent shifts in whale behavior, analyze the possible motivations behind their actions, and assess the health of the internet computer ecosystem from an on-chain metrics perspective. There's a lot of speculation out there, but we're going to ground everything in actual data to see what's truly unfolding. This video is for informational and educational purposes only. It is not financial advice. Always do your own research and consult a professional before making any investment decisions. Let's start with a fascinating piece of data from the Internet Computer Terminal. This is one of the primary analytics platforms for tracking network activity. According to their latest report, the number of major ICP holders took a noticeable dip after the Caffeine AI event. Now, if you're not familiar, the team behind the Internet Computer, Dfinity, held a big reveal for their AI-powered tool called Caffeine AI in early June, and surprisingly, they followed that with another event just weeks later in July. That second event confused a lot of people, including myself. Why host another major launch so soon? The first announcement already created buzz. It turns out the original June event may have been more of a soft launch. Caffeine AI, which many thought would run fully on-chain, was revealed to be more of an off-chain large language model, LLM, similar to other tools out there, just tailored specifically to Internet Computer's ecosystem. This distinction matters because it adjusted expectations. While it's still a valuable tool and unique in being the first LLM native to a blockchain platform, the realization that it wasn't running entirely on-chain may have cooled some of the hype. And shortly after this second event in July, we saw something interesting happen. The number of wallets holding 100,000 or more ICP dropped significantly. That's about $500,000 worth per wallet at current prices. So what does this drop in whale wallets really mean? There are a few ways to interpret it. One is that we're simply seeing redistribution. Those whales sold off, and the tokens were picked up by smaller holders, which can actually help decentralize the network. That's not a bad thing. But there's another possibility. This could be a classic case of buy the rumor, sell the news. Investors may have built positions ahead of the highly anticipated AI event, and when the launch didn't quite deliver on the excitement people expected, they sold their holdings for a profit. This theory gains some credibility when you look at price movement. ICP moved from around $4.50 to as high as $6 around that time, a healthy 50 to 60% gain. For anyone holding six-figure quantities, that's tens or even hundreds of thousands of dollars in realized gains. Now let's shift gears to exchange activity. One of the most telling indicators of market sentiment is how much of a coin is sitting on exchanges. Recently, ICP balances on centralized exchanges surged to 51.7 million tokens, reaching a 12-month high. At current prices, that represents over $280 million in liquidity. To put that into context, the market cap of ICP is around $3 billion, so roughly 9.4% of the total supply is now exchange accessible. Is that high? Well, it depends on what you're comparing it to. We'd need similar figures for Ethereum, Bitcoin, and Solana to really judge. But the key point here is that large movements to exchanges often precede selling. Not always, but very often. Whales don't typically move their tokens onto exchanges just to let them sit. In fact, many traders assume that once a whale sends funds to an exchange, it means they're ready to sell, if not immediately, then within hours. And based on historical patterns, this seems accurate. We've seen ICP exchange balances rise ahead of major price rallies, followed by sell-offs. It's a familiar pattern, one that matches the movements we're witnessing now. Let's rewind to mid-2023. Back then, ICP hovered around $7. By December, the price had doubled to about $15. If you entered at $3, you could have seen a 5x return. Not surprisingly, during that time, exchange balances also grew. People were moving coins in preparation to sell. These were likely retail traders, not institutions, since we still don't have an ICP ETF or any major institutional involvement at scale. And after the market peaked, those balances fell. The assumption is many traders exited their positions as prices dropped, while savvy whales may have accumulated again at lower levels. Then, leading up to this year's AI events, we saw another spike in balances and price, signs that a similar cycle could be repeating. Another fascinating metric is the ICP burn rate. During the July event, the one centered around Caffeine AI, ICP burns spiked to 17,000 tokens in a single day. For context, burning ICP tokens means converting them into cycles, which are used to power computation on the internet computer. More burning means more usage. This burn was likely driven by real-time demonstrations of Caffeine AI, where people could test the tool and interact with it directly. However, if you look at charts from Internet Computer Terminal, the increase in burn wasn't sustained. It was a spike, meaning a temporary surge in usage rather than ongoing adoption. Still, over 1,000 new canisters, smart contracts on the Internet Computer, were created during that July event alone. As of now, the total number of canisters deployed is nearing the 1 million mark. That's a huge milestone and shows that developers are actively building. But here's the thing. We need to view all of these developments in the broader context of the crypto market. We're in the second half of 2025, which many analysts believe is the tail end of this cycle's bull market. That doesn't mean prices can't spike higher in the short term, especially with potential catalysts like pro-crypto legislation or improved regulation frameworks. But it also means risk is higher for long-term holders. Tokens flooding exchanges could mean increased volatility. Either whales are cashing out or short-term traders are entering. Neither is particularly bullish for sustainable price growth. And we know that once the broader market enters a corrective phase, which many expect to happen in 2026, altcoins often get hit the hardest. Another critical factor we need to address is communication. The Dfinity Foundation needs to improve how it presents these launches and innovations. For example, vague terms like Caffeine AI or self-writing internet may sound futuristic but don't clearly communicate what the product actually does. The average crypto investor or developer isn't going to dig through blog posts and documentation to understand the use case. Instead, there should be focused messaging. Show how Caffeine AI can generate real-world dApps that are deployable directly on-chain. Highlight the fact that Internet Computer is the only blockchain capable of building full-stack applications natively. Emphasize cross-chain potential, especially how ICP can support and extend the functionality of networks like Ethereum. The Internet Computer isn't lacking in technical innovation, but it may be lacking in outreach. Imagine a podcast featuring Dfinity leadership and developers from other chains like Hedera or Ethereum. Showcasing interoperability and shared infrastructure could bring ICP into mainstream conversations. Right now, that visibility is limited. Ethereum, for instance, lacks the computational layer to build fully featured dApps. ICP can offer that. Why not market this synergy more directly? There's a real opportunity here for Dfinity to build bridges instead of operating in a silo. So where does all this leave us? Whales appear to be selling after the hype around Caffeine AI didn't meet expectations. Exchange balances are rising, indicating potential short-term sell pressure. The burn rate shows signs of network usage, but not necessarily sustained growth. Canister deployments are strong, pushing toward 1 million total smart contracts. Messaging from Dfinity needs to be clearer and more strategic. The overall crypto cycle is approaching a late-stage phase, and risks are increasing. Despite all this, the fundamentals of the Internet Computer remain solid. It's one of the few blockchains that can offer true decentralized computation. But that doesn't guarantee price appreciation in the near term. Market cycles, messaging, and community involvement all play a role. If you're an investor, developer, or just someone following the space, now is the time to stay informed. Make decisions based on data, not hype. Watch what whales are doing, track on-chain metrics, and think long-term. So, what do you think about ICP's current position? Are you bullish on its growth in AI and DeFi? Drop your thoughts in the comments below. If you found value in this deep dive, don't forget to hit that like button and subscribe for more breakdowns like this. Thanks for watching. Stay curious, stay cautious, and I'll catch you in the next one.